Thank you, madam.
It's working?
Yes, madam, it's working.
Great, great.
Okay.
Sorry, sir.
No
I hope
problem.
your session goes well.
Yeah, thank you. Thank you. Yeah.
Yeah, thank you.
Good evening, all of you. First, could you confirm, am I audible? Am I visible? Could you please confirm that? Regrets for the delay in starting the session. Due to some technical issue, there was a delay. But could you please confirm now? Am I audible? Am I visible? Is everything fine? Because of some technical issues, there was some delay. Yes. Good evening, Nandan, Krishna Kumar, Vanshika. Good evening, all of you. So, in this session, we are going to do the revision of hire purchase and installment sale transaction. The weightage of this chapter is somewhere around 5 to 10 marks. But before we start with the revision of this chapter, I want to inform you that Unacademy has a iconic program, has come out with an iconic program. The features of this iconic program is that in this program, one-to-one personal coaching, doubt solving with the faculty, evaluated test series, printed books will be available. So those people who are preparing for CA intermediate examination, I would recommend them to take subscription at Unacademy take a subscription of CA intermediate iconic program at Unacademy because of not only the live lectures and unlimited access and you can access the lectures from any device. These facilities are available in the normal subscriptions also, but apart from this, the additional benefits which you get at iconic subscription is you get printed books, you get industry expert sessions. Those people who are working in the industry, they will guide you where you should do articleship, and they will also help you to choose a area of articleship in which you are interested, and you can ask them the questions that which will be more beneficial and which stream you should choose. So take up the subscription. When you are taking up the subscription, use the code Yeshas Live. It will cost you a 12-month subscription will cost you 3188 per month. Totally 38,250 will be the cost. And one more important information for CA Foundation students, a mega combat on 28th November at 12 p.m. is being conducted by Unacademy of 60 minutes, having 40 questions, and there are a lot of prizes which you can win in that combat. When you are enrolling yourself for that combat test, use the code Yashas Life. Okay, let's start with the revision session. We will revise hire purchase and installment sale transaction in this session. First, what is a hire purchase transaction? Because hire purchase transaction is a transaction where the purchaser of goods or asset is required to pay only a small amount, that is down payment at the time of possession, and the remaining amount for the goods or the asset is to be paid by way of installments in future. The main features of hire purchase transaction are the possession of the goods or the possession of the asset will be transferred to the purchaser immediately upon down payment. The remaining amount is to be paid in future by way of installments. As the balance is paid late, as the remaining balance amount will be paid late, the purchaser will have to pay interest along with the balance amount, because the remaining amount will be paid in installments by way of installments in future, and as the balance amount will be paid late, the purchaser has to pay interest additionally. Interest is always calculated on the outstanding cash price at the time of each installment. This is important sentence. Interest is always calculated on the outstanding cash price at the time of each installment. And installment amount will include the cash price as well as the interest. Hire purchase price is the total cash price plus the total interest, or another definition of hire purchase price is down payment plus all the installments. The legal ownership will be transferred to the purchaser only upon payment of last installment. If the purchaser defaults in the payment of installment, seller will have the right to take back the asset or the goods from the purchaser, and whatever amount the purchaser has paid so far till the date of taking back the goods will be taken as a hire purchase rent, will be taken as a rent for usage of goods and will not be refunded. That amount will not be refunded back. Our objective in this chapter is to learn the accounting entries for hire purchase transaction in the books of buyer and in the books of seller. But before we discuss the accounting for hire purchase transaction, one important point which you have to understand is that the accounting for hire purchase transaction is based on substance over legal form. Substance of hire purchase transaction is that the purchaser has bought the goods and he will be paying for those goods and asset in installments. It is actually a finance arrangement. Therefore, based on the substance over legal form, purchaser will record the asset in his books from the very first day, while seller will record the sales in his books on the very first day. Although legal ownership is not with the purchaser, but all the risk and rewards regarding the assets belongs to the buyer. So even though legally the asset doesn't belong to the buyer, but all the rewards, all the risks associated with the asset is with the buyer. So buyer will record the asset in its books, will recognize the asset in its books on the very first day, and the seller will record the sales on the very first day. For accounting purposes, hire purchase transactions can be recorded by two methods. One is cash price method and one is interest suspense method. So there are two methods of recording the hire purchase transaction. One is cash price method and one is interest suspense method. First, we will learn the accounting of hire purchase transaction in the books of hire purchaser under cash price method. Guys, based on substance over legal form, hire purchaser will record the asset in its books on the very first day at cash price, not at hire purchase price. Because interest which the hire purchaser will be paying to the seller is for late payment and not for the asset. Interest is not paid for the asset. Interest which we are going to pay will be for late payment. So in the books of the hire purchaser, the asset will be recognized at the cash price and not the hire purchase price. When the asset is purchased, at the time of entering into agreement, the entry will be asset account debit to hire vendor with the full cash price. When down payment is made, hire vendor account debit to cash with the down payment amount. When installment becomes due, interest account debit to hire vendor account with the interest amount. When the installment is paid, hire vendor account debit to bank. The journal entries are very simple in this chapter. Depreciation will be recorded in the books of hire purchaser because of substance over form. Although legal ownership is not with us, but since all the benefits from the usage of the asset is coming to us, so all the expenses related to the asset will also be recorded by the buyer. Depreciation to asset, and then we'll close the interest and depreciation by transferring it to P&L account. So these are the entries which are required to be, which will be recorded in the books of the hire purchaser under cash price method. Asset account debit to vendor account with cash price. When the down payment is made, vendor to bank. When the interest becomes due, interest account debit to vendor account. When the installment is paid, vendor to bank. When the depreciation is charged, depreciation to asset, and then we transfer the depreciation and interest to P&L account. Then there is one more method by which we can do accounting of hire purchase transaction in the books of the buyer, and that method is interest suspense method. Guys, under interest suspense method, we recognize the asset at cash price only. We pass an entry asset account debit to hire vendor account. We create a liability towards the hire vendor. But one more additional entry we record. This is the difference between cash price method and interest suspense method. Under interest suspense method, the total interest which the buyer will be paying to the seller over the life of the hire purchase contract, the total interest which the buyer will be paying to the seller over the life of the contract will be recognized on the very first day itself in the books of the purchaser by passing an entry hire purchase interest suspense account debit to hire vendor account. This is the total interest which the buyer will be paying to the seller. It's get recognized on the very first day only. Then we make the payment of down payment, entry will be vendor to bank. Then whenever the installment becomes due, on that installment, whatever is the related interest, that entry which we record is interest account debit because it's an expense to interest suspense account. In the interest suspense account, we have put the total interest which the buyer will pay for all the installments. Then as and when the installment becomes due, the interest related to that installment, we take it out from the interest suspense account. Thereby the interest suspense account balance will decrease, and interest suspense account has a debit balance. To decrease it, we have to credit. We take out the interest related to that particular installment from the interest suspense account and we put it to the interest account. We debit to the interest account. Then when the installment is paid, we pass an entry hire vendor account debit to bank, and then the depreciation entries are same. So the entries which are different in this method are, this second entry is different. The interest which will be payable will be recognized on the very first day, and this entry is also different. When the installment becomes due, the interest related to that installment is included in the hire purchase interest suspense account. We take it out from the hire purchase interest suspense account and we put it in the interest account. Now, under interest suspense method, please do not ignore interest suspense method. Many student feels that interest suspense method they will not ask in exam. What we think that they will not ask in exam, that is what they ask in exam finally. Under interest suspense method, the hire vendor account is credited with the cash price and as well as the total interest which will be payable over the life of the hire purchase contract. In short, in this method, we credit the hire vendor account with hire purchase price. So under interest suspense method, the hire vendor account gets credited with hire purchase price. So the balance of hire vendor account represents the outstanding hire purchase price payable to the vendor. Similarly, Interest suspense account represents the outstanding interest related to future installments. That is those installments which are not yet due. In the balance sheet, I'm talking about balance sheet presentation now. In the balance sheet, the balance of hire vendor account will appear as a liability, while the balance of interest suspense account will be deducted from the balance of hire vendor account. Sir, what you are saying? Slowly, once again, I will repeat. Under this method, hire vendor account is credited with cash price as well as the total interest. So basically, hire vendor account gets credited with higher purchase price. So the balance of hire vendor account on a particular day will represent the outstanding higher purchase price, and the balance of interest suspense account will represent the outstanding interest related to the future installment which are not yet due. In the balance sheet, the balance of hire vendor account will appear on the liability side, and from that amount we will deduct the balance of interest suspense account. Both the methods, cash price method and interest suspense method, are different only from presentation angle. Under cash price method, the higher vendor account directly appears at outstanding cash price. But under interest suspense method, the balance of interest suspense account is deducted from the balance of higher vendor account to arrive at the cash price. Fine, sir. Now, accounting entries in the books of higher vendor. There are two methods. Higher vendor is the person who is selling the goods on hire purchase contract. In the books of hire vendor, also known as hire seller, there are two methods of recording the transaction. One is sale method and one is interest suspense method. Sale method is like cash price method, and interest suspense method just now we discussed only. Under sale method, in the books of the seller, we pass an entry, purchaser account debit to HP sales account, because for a vendor it is like a sale of goods, so it is treated like a credit sales. Like when we sell goods on credit, we pass an entry debtor account debit to sales. Here we pass an entry hire purchaser account debit to HP sales account. We attach the word HP to differentiate it from normal sales. We attach the word HP. When the down payment is received, entry will be debit what comes in, credit the giver, bank account debit to hire purchaser account. When the installment becomes due, hire purchaser account debit to interest, and when the installment is received, bank to hire purchaser account, and then the interest account is closed by transferring it to P&L account, and HP sales account is closed by transferring it to trading account. Fine. Now, under interest suspense method, we debit the hire purchaser account with the higher purchase price. Sales account is credited with the cash price, and interest suspense account is credited with the total interest which is receivable from the buyer over the life of the contract. When the installment is received, bank to hire purchaser. Whenever a particular installment becomes due, the interest related to that particular installment is taken out from the interest suspense account and put to interest account, thereby decreasing the balance of interest suspense account. And then we close the interest account by transferring it to P&L account, and sales account is credited to trading account. In this question, in this chapter, apart from the repossession entries, of course, repossession entries are important, no doubt, and this theory is also important. This is also very, very important. This is one of the favorite topics, the theory question. Sorry, not this one. This is their important, this is their favorite theory question in exam. We will come to that, we'll discuss that. But before that, few things which we have to discuss in this chapter. is regarding calculation of interest, principal amount, and installments and cash price. So we have to do the discussion of those things. So let's do the discussion of calculation of cash price when cash price is not given in the question. Sometimes the examiner will not give us the cash price of the goods, and if cash price is not given, we will not be able to pass any journal entries, because we recognize the asset in the books of the hire purchaser. In the books of buyer, the first entry which we record is asset account debit to hire vendor. This entry is recorded at cash price. Similarly, in the books of vendor, the first entry which we record is hire purchaser account debit to hire purchase sales account, and this entry is recorded at cash price. But sometimes the question will not give you the cash price, and we will be required to determine the cash price. There are two methods of determining the cash price. There are two methods by which we can determine the cash price. Number one is a reverse method. They call it without using annuity table. I will call it backward method, reverse method. And second method is with the help of annuity table, which I prefer to call it present value method. So there are two methods of calculating the cash price. One is reverse method, one is present value method. Because under reverse method of calculating cash price, we start with the last installment. And then what we do is that with the last installment, we find out the interest amount. From the installment amount, when we minus the interest amount, we get the principal amount. And like this, in reverse way, we calculate the principal amount included in each installment, and then we do the summation of everything to arrive at the cash price of the asset. Say for example, if we take an example to understand this quickly. Say for example, the question tells you that a buyer has purchased an asset from the seller on hire purchase system, and 3 installments has to be paid. First installment is of 53,000, second installment is of 49,000, and third installment is of 55,000. These are the installment values. Rate of interest charged by the buyer is 10%. Rate of interest is 10%, and down payment is 70,000. And they ask you to calculate cash price, because this is the price with which the first entry will be recorded. This is the price on which the interest is calculated. This is the price on which depreciation is charged. So this is the most important price in the entire chapter of hire purchase. Without this, we cannot solve or pass any journal entries. So the question will tell you to calculate the cash price. Now we can calculate the cash price in two ways in exam. Our institute calls it without annuity table and with annuity table. I have the habit of calling it backward method or reverse method. And with the help of present value method. Now, first let's discuss under backward method how the cash price is calculated. Under backward method, what we do, We start with the last installment. We create a table like this: particulars, amount outstanding at the time of installment. Then one column we create for interest, and then one column we create for cash price. We start with the third installment, and then we go in the backward direction. What is the value of the third installment? The value of the third installment is 55,000. Fine. So we write over here 55,000. Now this 55,000 includes interest of 10%. So this 55,000 has principal amount also, and in this interest is also there. If principal is 100, interest included in this is 10 rupees. So this 55,000 is equivalent to 110. So if this is 110, then what will be equal to 10? So we've used the unitary method. This is 110 because this is inclusive of interest. Installment is inclusive of interest. So this includes principal amount also and interest amount also. If principal is 100, interest will be 10. So this is 110. Then if you multiply by 10, you will get to know the interest amount in this 55,000. So the interest amount is 5,000. Now if we remove the interest amount from 55, we'll get the principal amount in the first installment, which is 50,000. Then what we do? We come to the second installment. Second installment was 49,000. The value of the second installment is 49,000. With 49,000, what we do? We add back. We add back the principal amount outstanding from the third installment, which we got in the first sequence. So we get 99,000. In this 99,000, then we find out the interest by dividing by 110 and multiplying by 10. And from this 99, when you remove the interest of 9,000, you will get the principal amount. Then first installment. What we do with the first installment, which is 53,000, we add this 90,000. We get 1,43,000. Now this 1,43,000 includes interest. So it will be equal to somewhere around 13,000, say for example. Yes, 13,000. So the principal amount outstanding will be 143 minus 13, 1,30,000. Then what we do? With 1,30,000, we add down payment 70,000 to arrive at the cash price, which is 2 lakh. This is how we calculate the cash price by backward method, reverse method, like this, in these steps. There is one more method of calculating the cash price, that is called present value method, which is more simpler to understand, and it is easy to solve also. Under present value method, what we do is that with the installments, we multiply the present value factor. See, these installments are future values. With this, when we multiply the PV factor, we will get to know the principal amount included in these installments. So PV factor at the rate of 10%. We multiply the PV factor at the rate of 10%. The PV factor for 70,000 will be 1 only. for down payment, then it will be 0.9091, then it will be 0.8264, then it will be 0.7513. So we multiply the PV factor with the values, present value factor, then we get present value in rupees. These are future values. With that, when you multiply the PV factor, you will get the present value in rupees. 70,000, then 48182, then 40494, and 55,000 into 0.7513 will be 41322. Then when you add all these present values, you will get 1,99,998, which is approximately equal to 2 lakh. This is how we calculate the cash price under present value method. So there are two ways of calculating the cash price. If the question is silent, you can use any method and write a note about it in exam that this particular method has been used for calculating the present value, for calculating the cash price. When you will see ICA answers, they generally use the backward method of calculating the cash price, but it's not mandatory as such. You can also calculate it by present value method, whichever you are comfortable with. You can use that method and accordingly compute. But if the question specifically tells you that you have to use this particular method only, then we don't have any option. Fine. The next point is in this chapter is repossession. First of all, what is repossession? Let's discuss that. Guys, as seller is the legal owner of the asset till the last installment is paid by the buyer. So if the buyer defaults in the payment of any installment, then the seller will take back the asset from the buyer. So when the seller takes back the asset from the buyer, then it is known as repossession of asset. It is done due to default made by the buyer in paying installments. Okay, sir. Guys, for accounting purposes, repossession is divided into two parts: complete repossession and partial repossession. Complete repossession is a situation where all the assets and goods sold by the seller to the buyer is taken back from the buyer. All the goods. If the seller has sold 4 trucks, machines to the buyer, and if buyer defaults in the payment of installment, principal, interest, then if the seller takes back all the 4 machines, then it is called complete repossession. Partial repossession is a situation where only a part of the goods sold by the seller to the buyer is taken back. For example, if the seller has sold 4 machines, 4 trucks, and if the buyer defaults in the payment of the installments, then the buyer can take back from the seller, if the seller takes back from the buyer 1 truck and leaves the remaining 3 trucks with the buyer, then this situation is known as partial repossession. So out of 4 trucks, if 1 truck is taken back, then it is known as partial repossession. First, we'll discuss the accounting for complete repossession in the books of hire purchaser. First, we are going to discuss the accounting for complete repossession in the books of hire purchaser. Step 1. All the entries till the date of repossession. All the entries till the date of repossession. All the entries till the date of repossession will remain same. In the books of hire purchaser, first you record the entry for purchase of asset. Asset account debit to hire vendor. Then you record the entry for down payment. Down payment entry will be vendor account debit to bank. Then you record the entry for interest due, interest account debit to hire vendor. Then you record the entry for depreciation, depreciation account debit to asset account. Then you record the entry for making payment of installment, hire vendor account debit to bank. All the entries till the date of repossession will remain same. Interest will accrue, depreciation will be provided till the date of repossession. Everything you keep on doing normally. Upon repossession, hire purchaser will not pay the balance lying in the hire vendor account. Therefore, hire vendor account has to be closed in the books of hire purchaser by passing an entry hire vendor account debit to asset account. I repeat, upon repossession, when the seller takes back all the goods from the buyer, in the books of buyer, whatever is the balance lying in the vendor account, whatever amount the buyer owes to the seller, that account will be closed. So to close a liability account, we have to debit, and we will close the asset account also. To close an asset account, we have to credit. This entry will be passed with the balance lying in the hire vendor account. This entry will be passed with the balance lying in the hire vendor account on the date of repossession. Asset is going out, credit it because the seller is taking back the asset, and our liability towards the vendor will decrease. We don't have to pay the future EMIs, so we will cancel our liability by debiting. Now, under complete repossession, since all the assets are taken back, so we have to close the asset account also. So we have to credit the asset account. But we have credited the asset account with the balance lying in the hire vendor account. So when you will prepare the asset account, there will be some balancing figure in the asset account. The balancing figure in the asset account represents profit or loss on repossession, which is to be transferred to P&L account. If there is a profit, entry will be asset to PL. If there is a loss, entry will be PL to asset. I repeat, after passing this entry, since all the assets are taken back, so we have to close the asset account. The balancing figure in the asset account will represent the profit or loss on surrender of asset or repossession of asset, which will be transferred to P&L account. If it is a profit on repossession, entry will be asset to P&L account. If it is a loss on repossession, it will be P&L account debit to asset account. Next, accounting for complete repossession in the books of hire vendor. Let's discuss the accounting for complete repossession in the books of hire vendor. All the entries up to the date of repossession in the books of vendor will be same. Interest accrued, installments received, etc. Upon repossession, in the books of hire vendor, we have to close the hire purchaser account. So whatever balance is lying in the hire purchaser account will be transferred to a separate account called goods repossessed account. So upon repossession, hire vendor will not receive the balance lying in the hire purchaser account. Therefore, the hire purchaser account will be closed. We have to close the hire purchaser account by passing the entry goods repossessed account debit to hire purchaser account. This entry will be passed with the balance lying in the hire purchaser account upon repossession. We cannot debit sales return account. No. We cannot debit sales return account. Many students think, sir, from vendor's viewpoint, it is like sales return only. No. So why are we not passing an entry sales return account debit to hire purchaser account, sir? What is the problem? Instead of goods repossessed account, why can't we use sales return account? We cannot debit sales return account because the goods sold were new goods while the goods coming back are old goods. So if the goods coming back are old goods, you cannot put it in sales return account. You have to put it in a separate account called goods repossessed account. All the goods, after all the goods are repossessed, to bring it to a saleable condition, the vendor will incur some repair expenses because the goods which we are taking back are old goods. Now, to bring it to a saleable condition, we have to incur some expenses. So, the expenses which we will incur to bring these old goods into saleable condition, the entry for that will be goods repossessed account debit to bank. After the goods are repossessed, to bring it to a saleable condition, hire vendor has to incur repair expenses. So the entry for repair expenses will be goods repossessed account debit to bank. As repair expense is specifically incurred on the goods repossessed, to bring it to saleable condition, it is debited to goods repossessed account and not to repair account. Not repair account. Don't debit the repair expenses to repair account, but debit it to goods repossessed account, because these expenses are specifically incurred for the goods repossessed. So this is the first entry and this is the second entry. Don't use sales return, don't use repair, use goods repossessed account. Now, after the goods repossessed are brought to saleable condition, nice condition, proper condition, hire vendor would sell them. When hire vendor will sell the goods repossessed, in the books of hire vendor, the entry will be bank account debit to goods repossessed. Bank account debit to goods repossessed. We cannot credit sales account. No. Don't credit sales account, because our business is not of selling old goods. Our business is of selling new goods only. So sales account will be credited only for sale of new goods. This is old goods sold. So we cannot credit sales account. And also one more reason, guys, when goods were repossessed, purchase account was not debited. When goods was repossessed, goods repossessed account was debited, not purchase account. So now at the time of sale, we have to credit also goods repossessed account to close that account. After these entries are recorded, these three entries, after you have recorded, the balancing figure of goods repossessed account will represent profit or loss on sale of goods repossessed, which will be transferred to P&L account. If the goods repossessed remains unsold at the year end, then in the books of vendor, such goods repossessed will be shown in the balance sheet of the vendor under the heading of inventory. Goods held for sale. If the goods repossessed remains unsold with the vendor at year end, then it will be shown in the seller's balance sheet as an inventory, goods held for sale. And as per accounting standard 2, inventories are to be valued at cost or NRV, whichever is lower. For this purpose, the cost of the goods repossessed will be amount not received from the hire purchaser, that is the amount by which we debited the goods repossessed account for the first time, plus repair expenses. That will be, these two things ka summation will be treated as cost. It will be compared with NRV, whichever is lower, that is the price at which the goods will be valued. Now comes partial repossession. Guys, partial repossession, the accounting for partial repossession in the books of hire purchaser. Let's first discuss the accounting for partial repossession in the books of hire purchaser. It's simple only. Because in the books of hire purchaser, the accounting under partial repossession will be same as complete repossession, with the only difference that the entry would not be passed with the amount required to close the hire vendor account in the books of purchaser, but it will be passed at agreed value. Means the entry which we pass in the books of purchaser, hire vendor account debit to asset account, this entry in complete repossession is recorded with the, in case of complete repossession, this entry is recorded with the balance lying in the vendor account on the date of repossession. But under partial repossession, this entry is recorded at agreed value. So what is agreed value? Agreed value is the amount by which the vendor has reduced the liability of the purchaser for the goods taken back. 4 trucks the buyer has purchased from the seller. So we have to pay EMIs of 4 trucks. One of the truck has been taken back by the vendor. So now we don't have to pay EMI for 1 truck, but the amount by which the liability will be reduced by the seller for that 1 truck will be decided by the seller, and that amount is called agreed value. 4 trucks buyer purchased, 1 truck the buyer is taking back. So now in the future, 4 trucks buyer purchase, 1 truck the seller is taking back. Now in the future, the buyer has to pay EMIs for only 3 trucks. So we don't have to pay EMI for 1 truck. So our liability, buyer ka liability towards the seller will go down, but the amount by which the liability will go down will be decided by the seller, and that value is called agreed value. So this entry will be recorded at agreed value. That's the only difference between complete repossession and partial repossession. In the books of hire purchaser, the difference between the book value of the asset repossessed and the agreed value will represent the profit or loss on repossession, which will be transferred to P&L account. The truck which has been taken back by the vendor, and the agreed value, the value at which the truck has been taken back, the difference between these two values will be transferred to P&L account and will represent the profit or loss on repossession. This is how the accounting is done under partial repossession. Any specific doubt in hire purchase chapter, guys? Anybody? If you have, please ask. We have done a quick revision of hire purchase chapter. Any doubt? Specific doubt? Okay. Thank you so much. See you tomorrow again at 5:30 with the revision of other chapters of our account syllabus. Thank you all of you. Good night. Bye bye. And if you have any doubt tomorrow, you can ask. Bye bye.